Well, hello everybody. Let's get into the midweek update. It's good to see everybody jumping on in. It's the 13th of August. Finishing up basically the summer for me at least. I know my kids go back to school probably, I think next week, Monday. Some are already back into school, stuff like that. I'm kind of interested to see what September does, especially in light of some of the movement that we've seen over the last little bit. All right, let's get into it. You guys know how this works. We're going to share trades. Thank you for sharing.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Our current outlook, and it seems we're back to the bullish sentiment. So we had a pretty good little hiccup there at the top. Things get skittish, and what I refer to as the top is we had about a week or two ago. The market set some all-time highs, big gap to the upside, bearish engulfing candle, blow off top, whatever you guys want to call it. But it was really cool because it did take a correction. However, that correction only lasted, a day, maybe two. And then that sentiment came right back in. We got a CPI in line with expectations yesterday. We have jobless claims and PPI retail sales. I think a lot of it right now is, we got the tariff thing kind of playing itself out back and forth. But I really think it's going to be how much the markets have priced in the expectations of multiple rate cuts, not just the one that's coming in September, which, to tell you the truth, folks, was actually a little threatened for a while there, which is why I thought that first gap down that we had happened. However, in light of some of these economic events, or some of these, I should say, reports, it could be back on the table. So it's not just September; it's September and what? And I think that's where these markets are at. We've got some earnings seasons that the earnings season is still going on. Some pretty strong numbers from very large companies. We also had some more tariff news that came out that seemed to benefit companies that were being built and traded and produced in America. So it brought the sentiment back. It really did. It brought the bullish sentiment back. I'll get to the chart here in a second, but it put us right back up this +3 area. Weekly side, we could be +1, +2. It just depends on how you look at it. I see it as it's a little extended. However, there's just nothing really in the way. So that's kind of what that's where we're at. So let's just get straight out to it. So this is our action for today, and as always, a little bit of a surge followed through from yesterday. Yesterday had a pretty good move to the upside. So a gap up here, gap up, gap up. All three of the markets gapped up. Dow's consolidating. The Nasdaq and the S&P are actually pulling back. To be expected, most of the time you get 2 to 3 directions in a day, right? You get the open, you get midday, and then you get the close. Sometimes they agree with each other. Sometimes they're back and forth. But you can expect three variations, I should say, of volatility throughout a day. Breakfast, lunch, and dinner, call it that, or open midday doldrums and close. But the overall motion is the only thing we really care about. So before I get there, let's jump into our groups. You can see it's mostly been, the last week has been specifically participated by almost everyone. There's some companies here in energy and real estate, and it could be a little bit about some of the worries of what the dollar's doing and the pressures on, do we get 1 rate cut, 2 rate cuts, how early? So I think there's still that question mark when it comes to anything interest rate sensitive. But everything else did had a pretty good move. Take a look at the 1-month performance for everything. It's very difficult to kind of erase that hiccup that we saw a couple of weeks ago. But if you take a look at everything in a smoother light, it's just been bullish and it's stayed bullish. A couple of things that might have had some big corrections, but not enough for me to change my tune, right? This glass half full, 0 to +1, 0 to +1 at least. So that's kind of where we're sitting right now. Let's get back to it. You can see heat map wise today, it's a little speckled. Yesterday was very, very strong. Lots of participation in the market yesterday. Pretty good move. Almost everybody, almost every single sector did participate to some point. There's always red out there. There always will be. But today's just a little bit of a hesitation. Well, at least so far from what yesterday showed us. So let's just jump into our SPY chart and let's get started there. And here it is. It's just pretty obvious. I mean, a very nice move to the upside. Notice there wasn't a lot of volume in yesterday's move. It was just kind of a let's just kind of relax and see what goes on based on some of the news that is out there and some of the events that we can see coming. Was it the CPI that caused this? I don't know. But once again, every single move can be justified or usually can be related to some sort of a catalyst. It kind of just makes people, us, comfortable. Oh, well, that's why. Oh, well, that's why. We're always looking for a reason, and technically there truly isn't. If it was an opportunity for a hedge fund to start to increase position sizes in a lot of these outperformers, it is August, right? So we've got August, September, October, November, December. We're about through with the summer. So we're about at this turning point of, oh, geez, if I missed out on a whole bunch of stocks as an institution or a fund, I'm really going to pay for it unless I start acquiring these now. So Rob went through a really cool detail in the end of day post about, hey, how these institutions will sit on the bid, and anytime it comes back, they'll just acquire it slowly, a few thousand shares at a time. At the end of the day, they need 500,000 plus shares. So this is very, very common, but we seem to have a stable and strong enough market to do so. So with any gap to the upside, I expect a little bit of retracement. I mean, understand, folks, we're still up just shy, 0.15% or about 1 point. But that's after a move to the downside. So we'll see where this stays. I'll take a look at all three since we're here. Here's the Qs. Qs is pretty much the same idea, gapped up, but it's back down to levels that it closed at yesterday. So we're flat on the Qs so far. A little bit more volatile, but still just this stubborn bullish. I don't know if you want to call it. This is just a massive round of profit taking. I actually said that a few times over the last few weeks. Looks like I'm proved right so far. Doesn't make a hill of beans difference if I didn't take advantage of it, right? So bullish sentiment has pushed this back up. It's back above new areas. It's setting new highs. It's like the end of July never happened. Now the diamonds, they're the stronger of the three today. Maybe it's just trying to play catch up. However, it still has a very optimistic, bullish pattern to it. I like this ascending triangle pattern that is trying to build a gap up that's moving higher where the other two are actually retracing. So we'll see where that finishes. But I imagine we finish close to or at all-time highs for all three markets as we finish out the summer. Now, what do we do after that? That's going to be kind of fun. But that's not how we roll here, folks. We trade the markets in front of us. So let's start doing that. So the overall outlook is a +3. We're back into the sentiment strong. The majority of the trades that I've leaned to personally in my account have been +1, -1, or zeros. Lots of zeros and +1s. My zeros have actually gone into +1s, which kind of hurts. So they've done well, but the +1s are doing pretty good, and I wish they were +2s, +3s. So it's just kind of the surge that we're into as of late. Let's get into a couple of trades, and I want to start off with the board here, folks. So keep typing if you've got them, but we'll start from the top to bottom here. So Dave's looking at Deere. Seems about as neutral as you can get. Oh, yep, it does. It looks very, very neutral. It is got its earnings here is that tonight or tomorrow? Absolutely. Before market opens tomorrow morning. So Deere has its earnings tomorrow morning. Let's make sure we make a note of that. So this about as sideways as you get. I agree 100%, Dave. I don't think it's going to stay there for very much longer, right? So what can we do with it? Not much. You can play an earnings trade on it. Earnings are fun. Go ahead and measure out kind of the strike prices that are expected. If you got like Thinkorswim or any sort of, Thinkorswim is really neat because it does have an expected or built-in volatility calculated for you. If not, all you have to do is take I would say the 510 strangle and add them together. And the premiums, how much they cost, add together. And you can add it to 510 and minus to 510. That's the expected built-in price when it comes to the volatility based on the premium. Yeah, I know it's super raw, but you'd be surprised at how helpful it is. So if you wanted to play the earnings on that, that's a good place to start. It could be kind of fun. Just make sure you don't overpay for it if you're going to do a purchasing side of an earnings, meaning, hey, I want to go ahead and do the strangle itself. Well, if it's expected to move $10 and the trade is going to cost you $10.50, well, you're not going to be able to make it. Majority of the time, it is completely priced in almost perfectly. However, if you expect it to maybe gap higher and move higher, or gap lower and then move lower, then you could just play one side or the other, meaning take the expected move to the upside, for instance, start there as your strike price, gauge some sort of a spread based on that calculation, meaning do I think it's going to exceed it? What I usually do is just take that same, or I should say standard deviation of the built-in price and just add it to the upper side. So if it's expected to move $5, I would start $5 in the money or $5 above and then add another $5 strike to it. It's really kind of simple. This is more of a guess than anything, but kind of a fun way to play it. So it has earnings. I do like the chart. Boy, it is wonderfully sideways, but I don't think it's going to stay there for very long. Now, all that fun factor being said, all that fun stuff being talked about, it's in a pretty strong area. It's if you take a look at the 20 and the 50-day moving average, the 200-day slope is really, really steady, really strong. Very long consolidation, this is very attached to expansion, growth. It's in the industrial sector. It's susceptible to energy changes, all sorts of things like that. So where's your belief? Well, I see a lot of shadows off the bottom. So I just know that this whole consolidation line that you've pulled up here, Dave, we're talking about, is very legitimate. So there are people buying this back up to this 510, we'll call it the 510 level. So we'll see where that goes. But could be a fun play to the upside for maybe an earnings or a downside if you want to be super bearish. Now, other than that, I would just kind of leave it alone and see what it does moving forward. And I do like it because the follow through is, hey, Joe, what do you think about a butterfly or a condor? And I love them both. I think they're great trades. Unfortunately, I don't think it stays there for very long because of the earnings. So fun one to take a look at. All right, Mike, what do we got? TER. Thanks, Dave. Let's go to Mike's got TER and Hasbro, I think, HAR. And we'll take a look at them one at a time. This is TER. I like this. This is a great pattern. You come out of earnings, and this is kind of what we expect to have happen moving forward. People liked it, and not only did they like it, but they developed a pattern to where price action so far has not revisited anything that it might have struggled with earlier. So this is the pattern it was in before its earnings. And you could see it was already showing a little bit of consolidation. Sorry, that line there is not too straight. And then it gapped up and played this game, went back down, but it stayed at a base level. And what I mean by that are these. That's a base level. So a lot of action higher or lower. Take a look at this one right here. This is a base level. I'll see if I can double these lines up for you guys. It really never threatened it. Shadows at those areas, right? I mean, yeah, I dipped here, but only for one day. So even though the top part of this was a little ugly, the base stayed. So after the earnings, big move, good volume behind it. I would treat this the same way, honestly. Okay, here's a base level. Okay, great move to the upside. Everybody had a good move. Do you expect this to continue higher? Sure. However, it's probably, I wish I could, let me get my box. I got a circle. It might do something like this again, right? So we got to allow for that. So if you wanted to play something kind of sideways to up here, Mike, or anybody else that wants to play this, that's great. Just be aware of it. I mean, you even got the same subsequent shadows to the downside after its earnings, meaning, oh gosh, this is a great time for me to take some profits. But I'd focus a lot more on those lower lines than the upper ones. I do like it. It's a semiconductor. Semiconductors had amazing news when it comes to tariffs. Anything that's going to be built in the U.S. could have the opportunity to have some super beneficial tax breaks, at least. That's the rumor, right? It's in technology sector itself. So all good things. I do like it. Where it's at right now, though, Mike, if it feels a little extended, just be patient with it. You can see if it wants to consolidate or correct. Or if you're comfortable playing a range, now's a good time. Maybe you have a target up to, I don't want to go too far, but target it up and down, meaning allow it to continue to do this back and forth, and it might be a really good trade. So let me go ahead and add that to the list because I do like it. It's in the right sector. It's getting the right momentum. right time, comes out of earnings. It seems to be in favor. And once again, I started this whole class with sentiment. Bullish sentiment is back. I don't care why it is or why it shouldn't be or why it should be. That's our opinion. It's back, and it came back very quickly and has pretty much done nothing but go straight up since. We do have things that actually agree with it. So if you have that same outlook, this could be advantageous. So thanks, Mike. Let's take a look at, it is Hasbro. I knew it was Hasbro. I should have known that. Wonderful pattern as well. Comes out of its earnings. Where is that at? A little bit of a surprise, but it stabilized. So whether these earnings are good and bad, and you guys have heard me blabble plenty of times. If you've worked with me for more than 10 minutes, I don't care what the earnings are. It's what people do with it that matters. Oh, these earnings were horrible. It's going to go down. Well, I've seen them go straight up. I've seen that many, many times and vice versa. Whatever the earnings was, afterwards you could see pretty good sized shadow, but a shadow here, a shadow here, a shadow there, a shadow there. For some reason, there's a lot of traders, or I should say people that are buying this stock that have no problem buying it once it even comes close to 74. That's a fact. I can follow this. It's right in front of us. Now, where it goes from here, I don't know. That's where we do our charting. But I like it, Mike. I do. I like it. I like the push higher. I mean, today's advantageous because the whole market seems to have this little bit of a surge that started a few days ago. But it's a great one. Another really good trade. Possibilities on that. Anything you want. Shorter term. It's past its earnings, right? So a little longer term. Maybe kind of diagonalize it, or do it, I should say, multiple expiration cycles. Roll diagonals. It just depends on what you need in your portfolio and what makes the most sense to you. Two great trades, my friend. Thank you so much. Appreciate that. They're nice ones. Consumer cyclical. Another thing that was really hurt, defensive and cyclical. And when confidence and sentiment turns, nobody cares anymore. What used to be really risky, all of a sudden it's not. I love it. So it's just, that's how fickle trading is. All right, thanks. Let's go down the list here. Mason, Las Vegas Sands. And GTX, Las Vegas Sands. Okay, cool. I've got another one kind of in lines with this, the consumer cyclical part. I wasn't sure how they were doing. Las Vegas Sands and MGM is one I look at. I look at a few of them. But yeah, another base. Just bases here. It's consolidating. Things look a little bit more optimistic. That same idea. I like it. Nice little bust out. If you're afraid of it, the overall market's doing what they've been doing lately, which is that, hey, it's skittish at the top, that slow, stubborn burn. As we get closer to the end of the summer, probability states that it's not going to last too much longer. September, October usually really kind of smacks it in the face. And I'll say it again, it's one of these things where your kids are jumping up on the bed until you come upstairs. Once you go upstairs, all of a sudden, okay, something, hey, sit down, stop doing that. You get punished, go to timeout. And that does happen. I mean, it's a weird analogy, but it's the same idea. Markets are euphoric, they're excited, everything's great. All of a sudden, you get massive amounts of profit taking, risk assessments. So that's kind of what you get. And we'll see where that goes. So if you're worried about that at the end of the summer, because these patterns are really nice, you could still play them as a +1. But I do like the pattern on this. Let's take a look at GTX. All right. A little bit of a pullback. Okay. I like it. Same idea. Consumer cyclical. Auto parts has been a pretty interesting place to be in, right? AutoZone is one that's a pretty good one to look at too. But I like it. It's not quite a flag pattern, but I want you to understand that when you think about a bull pullback, it's usually 3 to 5 days. It's okay. 3 to 5 days it's quick. That's aggressive. But they can be slow. They could be a slide. And what's interesting about this is I kind of drew a channel here, but if you realize it's coming down to a very strong 20-day moving average. So being patient here has kind of paid off, but I like the emergence of it. Now, it could easily do the same thing back up. Or you could run into what we've just seen lately. This stuff. This is hard to catch, right? We know how hard this is to catch on the downside. It's also super hard to catch on the upside. So if you position size for this over here, and all of a sudden it does one of these big breakouts, it's okay. Because a +1 trade that experiences a +2 movement still makes gains. So if you want to err to the cautious side, I'd go there, but I like that one as well. Really good setup. Thank you for sharing. Lemonade, yes. Okay. Same idea. Comes out of earnings. It's in the financial area, insurance, property, casualty. Lemonade's popped up and down on the radar for a while. This has been kind of a fun little crazy ride since the end of last year. There must have been some pretty good numbers here. This is definitely some sort of acquisition surge going on. Okay, it's definitely bullish, but it's kind of on its surge. Tough about these, they're hard to catch. We always say don't try to catch a falling knife. Well, a breakout to the upside is the same idea. It's one of these things where you're trying to catch something that's got a massive surge. I would put it on my watch list. I'll put it down, but I want you to see if it can't settle and give you something more tradable where you're not buying it at $58.36, which happens to be the closing price of today, and the high for the next 3 weeks as it pulls back to 42, if that makes sense. So I like it. I got on the list. Thanks, Bill. But wait for this to get more of a tradable pattern or something, something with just more probability in your favor. Here's ELV, healthcare. These have been struggling as of late, and I do like them on the bear side. What's sometimes tough is when they bounce hard, right? But I like the range this is establishing. Let's see if I can draw it here. Came out of earnings. I'd like to see more shadows. Remember how I was just talking about the shadows off the bottom where you could see people were buying things off of the bottom to push it back up. I would like to see the same thing here. I'd like to see, we got a couple here and here. Okay. But as this hits that 300 mark, it'd be so cool to see a bunch of candlesticks like this. And then I'd be really stoked for something sideways to down. But where it's going right now, the pattern itself, range bound, sideways. Can I put it sideways? Or would you like me to put it down? You tell me, Mike. I like it either way. You know what I'll do? I'll put down sideways with an asterisk. How's that? You guys know how I roll. All right. All right, we'll see where that goes. But I do like it. I like the channeling pattern on the low part. Look at how the 20 and the 50-day and the 200-day moving average. When you see this spread like this, it is such a comfortable thing to be in. If you're short up in this area, nothing gives you more comfort than seeing them spread in the direction that you're in. It was really just trying to... it really just kind of gives you comfort. Okay, thank you, Mike. Mike says, I was targeting the lows, and that's wonderful. Because you could get into this bearish to sideways, -1. And if your target is down at this area, that's exactly where I'd expect this to go, even playing it at a 0. So I think we're on the same page. Thanks, that's a good one. Let's do RKLB for a short back to $40. Okay, yeah. So if you want to play something tight, it really just depends on your targeting. There's really nothing, there's no wrong way to play any stock. There isn't. And what's cool about using options, I could give you a +1 stock, but that +1 stock could be 3 weeks. If you think it is, or it could be 3 days. Or you could play, Joe, I think it's a +1 stock for 2 or 3 weeks, but I think in the next week and a half, it's going to be +2 or, be more aggressive. It really depends on what you want to do when you approach the stock and what you see in it. Here's the other thing is I'm going to go back to this. Now, maybe a lot of you traders aren't there yet, but there's something you need in your portfolio. If I'm showing you 1, 2, 3, 4, 5 bears, and you need a bear, and that bear has to be a -2, then you can make one of those bears a -2. What I'd like you to do is make the bear that's the closest to the -2 pattern your choice. However, okay, Joe, I need a -2 for the next week. Oh, wow. All right. Well, that's going to be that's going to be a different analysis than I need a -2 to carry me through the next 3.5 weeks. So you're trying to fill a slot based on what you have in front of you and what you can do with what you have. That's why a lot of the trades that I look at, if they don't fit what I want, I throw them away. So, hey, I take a look at 15, 12 trades and I might make 2, right? But there might be a time that all 10 look great, and guess what? I need all 10. So keep in mind that you're trying to make these kind of fit your style. But you know what, Kelvin? You bring up a great conversation point. So I like it. I mean, this to the 40 line, if it can break below where it's at, can get there, I believe, quickly. I don't think it's going to find any sort of true support until it hits. I'm kind of sideways on my chair here, folks. Oh, until it hits that line here, or maybe the 50-day. So right around that 40, but that could hit as soon as a couple of days with two more bad days in the markets. So something scalpable, something shorter term will be helpful. But your longer term stuff, do something longer term, a little bit more locked in, or something that can absorb corrective action, or I should say action different than what you want. Hopefully that helps. Cool. Okay. Excellent. Great. One that I thought was an interesting emerging bear, since we've done lots of bulls, was CrowdStrike. I see CrowdStrike as some common bearish indicators. Crossover a while ago. Descending highs. It's almost a slide, but there is some pretty good volume. Unfortunately, this is coming up on its earnings. But I just love this anemic move to the upside. This is down almost 1% on after a day that everything shot up. So, I mean, this is being sold into. And what's really cool is I just got done saying I like to see the shadows and the tails. Well, that's a shadow. That's a shadow. Okay, there's one here, but larger bear, gap, larger bear, larger bear. You see what I'm saying? The tendency has to be, okay, once this starts to slide, I think buyers step out and see how far it slides. Nice gap up with a bearish candle. It's a mini dark cloud cover. I would be targeting somewhere about the 420 level over the next few days. But I sure as heck don't want to be anywhere near that area. So CrowdStrike, back to Kelvin's conversation, would be if you guys need a pretty aggressive or, $10, I could probably target that in the next week or a half week, week and a half at most. -2 trade. That's a good one. Doesn't mean it can't flip right around and I lose everything. It's just that has the potential to be pretty aggressive pretty quickly, but I don't want to stay in it too long because it has its earnings. Cool. All right. Another one trade that I've liked and I've traded a lot and it all of a sudden changed on me is Delta Airlines. This has been my sideways guy for some time. So after its earnings, it gapped up and I was about to trade it sideways, but I saw it doing the correction. Now here it is moving higher. And it isn't just Delta. Look at the volume on this. I think it's just kind of a push in the airlines. Here's Southwest, American. I think it's just kind of a relief, whatever. But I just like the pattern that it's establishing now. This is still going to be a +1, 0 to +1, maybe target at 60, but this is going to be a 2-weeker for me at most or more. It's going to be a very slow, boring trade, maybe a targeted butterfly. But still, isn't it fun? That used to be a sideways trade that works. It's now more of a sideways to +1. But this little kick and surge, it has to kind of play itself out. It has to stabilize enough for me to maybe throw a couple more bucks at it. But it's definitely going to have a bullish bias to it. So those are the only two that I actually had outside of just our regular list. But there are a lot of trades out there, folks. There really are. So this is kind of where we're at, right? We've got a really good push to the upside. I think that CPI was almost a relief. I think the markets, or we as people, look for an excuse for the reason why something happened. Whatever you want to paint it with. We closed on our highs yesterday, and it pushed a gap higher. Now, we are definitely retracing a little bit from that point. However, guys, not by much. So I imagine we go back, and I don't know how long it's going to last. I think we go back to that comfortable, confident, bullish bleed to the upside. And it might seriously only be for the next week or so from options expiration, which would be technically the last one in summertime. So where we go from there, I don't know. So we might have a couple of maybe 2.5 weeks of this. So if you want to take advantage of this bleeding higher sideways stuff, be my guest. I mean, it's been working so far. I like it. All right, let me share the trades up and then I'll cut you guys loose. So here we got, here's our trades for today. Great work, guys. Thank you so much for the participation. This class is usually a slow starter. It usually takes a few weeks, maybe a month or so. But once I get my regulars in and you guys start to really benefit and understand, hey, let's roll with this. I mean, there's some great trades out there. All right, guys, that's all I got. Thank you so much for joining me, and I appreciate it as always. And let's keep it up. We'll talk to you next time. See you guys.